Welcome back, subscribers. It's Johnny Crypto, and I'm going to be straight up with you and tell you why mutual funds are the worst investment you will ever make.
I want money.
So a little digression. Why are they the worst investment you're ever going to make? Well, it might take me a small time to tell you why and why I hate financial advisors, because they peddle this stuff, because it's loaded with fees and you can do much better. And I'm going to be transparent and show you how to do much better with index funds. One has a lot of fees, one has almost no fees. So over time, one is going to make you go broke, or you're going to pay a lot in fees. The other one is going to compound interest and make you wealthy for retirement. Financial advisors, they've got to feed their family. They make a commission off of insurance sales and also a running money management fee where they don't manage your money. They just sell you to a mutual fund broker and put you in A shares, B shares, C shares, and then they just get a kickback for doing it. It's funny how there's only around 3,500 stocks on the New York Stock Exchange, but there's like 7,000 mutual funds that every major bank and financial institution has. There's a reason. It's because they make a lot of money from it, and you pay the fees. The bank, the institution, doesn't pay the fees. You pay the fees. So I guess we'll just jump in and show you how one of my index funds is doing. This is my safe portfolio. I call it my savings. Okay, there's 120 grand in there. This year alone, I've made 14 grand. That's a return of 28% in 1 year. Inflation has been going crazy. It's up about 6%. I'm well beating that, and I don't have that many funds in here, and I'll show you. So diving into it, what am I? I'm 75% index funds, 25% bonds. My bonds are doing jack squat. I've got two different indexes, and you can just get away with one. VTI is the one that I would say that it's the total stock market exchange traded fund. So you basically own every single stock on the New York Stock Exchange with this guy. And this one is just a high dividend S&P 500, which, it's following the Simple and Poor's 500 biggest companies in, the United States. So these two are the ones you could just get away with one. Very low fees, almost zero. Mutual funds, however, charge you 1 to 3%. So if you were let's just say you're a younger guy and you want to max out a Roth or an IRA, okay? So we're going to go zero initial investment. We're going to go $6,000, which is like $500 a month. So if you were going to max this sucker out, let's do 30 years, and let's say you have the rate of return of 6%. And let's just say 1% fee, okay? You found a very cheap mutual fund, because mutual funds either have a maintenance fee, they have a front end big fee, or they have a way exit selling fee, or they have all three, okay? And they hide them between A shares, B shares, C shares to make it sound like, it's not that big of a deal. So let's calculate. So at the end of 30 years, the gross would have been $502,000, so $500,000. And you would have paid $84,000 in fees. So you really would have had $418,000. So essentially, if you had VTI, just an index fund, this is how much money you'd have for retirement. But instead, you have this much because you gave a mutual fund company this much. And that's cheap. I've seen mutual funds, at least when I was, not anymore, disclaimer, I stopped that shit because it was making me go crazy. I've seen them as high as 3%. Wouldn't you have liked to give a financial institution, a bank that has plenty of money, half of your gains? $208,000 when you could have had $502,000. Just plain stupid. You're left with $300,000, and then now you're going to have to pay taxes depending upon what kind of a investment vehicle. If you used Roth, you wouldn't. But hypothetically, okay, you'd still have to pay taxes on this amount. Where you could just do it on your own and get to keep that money. And I use M1. I have a link in my description, and I can share this pie for people so that you guys can follow my pie. Boom, boom, boom. I can even put this in there where, boom, we share, create a link, and then you guys can just create your own account and your own savings, boom. And this is just, I have this set up just in a brokerage account. So this is a glorified savings account. Hence why I call it saving, because this is my safe money. And my safe money is doing rather effing good. Okay. So mutual funds, bad. Financial advisors, the majority of them are bad. You can do it better. Index funds are the way to go. This is Johnny effing Crypto. I'm here to help you make some money.